Hello and welcome everyone to Gold Asset of the Day for the 25th of June, presented by myself, Phil Carr, at the Gold and Silver Club. So as we go into a new week, what do you need to be aware of in the gold market? So last week we covered with you that gold broke out to the highest levels in over 6 years. We had seen hedge funds and money managers increase their overall net long position to the highest level in over 1 year. And with that, we saw retail traders over 70% were selling short, got caught on the wrong side of the trade. They essentially got liquidated, and we saw quite a significant move, breaking above 1,400 US dollars per ounce last week. So as we go into a fresh week, there are some points that you need to be aware of. So right now, gold is trading at 1,428 US dollars per ounce. It has broken out now over 10% over the month of June. We've seen a significant rise in holdings for not only from hedge funds and money managers, but also on the gold ETFs as well, which have now seen the biggest accumulation of ETF long positions on the GLD in over 11 years. However, there are some points that you need to be aware of as we get towards the end of this week. So we have the G20 summit, which is going to be taking place over Friday and into the weekend as well. And a lot of speculation is as to whether we are going to see some sort of negotiation and deal between the US and China. You definitely want to watch out for that. Also, end of month profit taking is one point to have on the radar as well. As we get towards the end of the week, it is going to be on Friday, the last trading day of June. And it's very common after you've seen such a significant move to the upside to see some degree of profit taking as traders start to lock in some profits as we head into a new month. Of course, as we go into next week, we also have non-farm payrolls as well. Later on Tuesday, we do have Jerome Powell speaking and from the Federal Reserve. And we want to see whether the rhetoric and the narratives are going to be kept the same from the previous FOMC statement, which of course was last week, which propelled gold prices over $70 higher. So we know that the Federal Reserve are in a position to cut rates as we go into the month of July. That is what they signified at last week's FOMC statement. So what we want to have a look out for is whether we are going to still see the dovish tone out of Jerome Powell later on today, and of course whether that's going to provide more weakness to the dollar and also support to gold. So over the last 3 trading sessions and since FOMC statement last week on Wednesday, there are some key points to be aware of. So we have seen 3 major drivers for gold prices in the latest week. Those have been the fact that the Federal Reserve is now essentially signaling to the market that they would look to cut interest rates as we go into July. The next FOMC statement is going to be at the end of July. We also have the potential for US dollar weakness to continue as we go and progress throughout the month of July as well. The US dollar breaking down to 3-month lows. And we also have safe haven bid for gold right now due to geopolitical risk between Iran and USA at the moment. So we've essentially seen on Monday tighter sanctions being now put on Iran, and that has created again another safe haven bid for gold, breaking out to 6-year highs above $1,400, now trading at 1,428 US dollars per ounce. So at the moment, what do you need to look out for in terms of the ranges for this week, and what should you be looking for in terms of your approach? You really do need to be looking at a research-driven approach to these markets, and you can utilize that to really give you an edge at the moment. So we know hedge funds and money managers, they've increased their net long positions to the highest level in over a year. We know, for example, the dollar is at the moment trading around those 3-month lows. We have the Federal Reserve speaking later on today. At the moment, they are poised to potentially cut interest rates as we go into July. You want to look out for that. Of course, you want to look at the G20 later on this week. We also have the OPEC meeting, which is going to be having a big impact on oil as we go into next week as well, which we'll discuss with you on Oil Asset of the Day. But you really want to look out for these key drivers as we go into next week. Right now, I'd look for, if we were to see some sort of a pullback on gold, given that we are quite overbought at the moment, if we were to see a pullback around that 1,430 level where we are at the moment, if we were to see a bit of a pullback, I would look at evidence of buyers coming back in around that 1,400 level. It will tend to be a magnetized zone. On the upside, if we continue to break out for gold, I would then be looking to target next key levels of approximately 1,400 and approximately 50 to 1,460 US dollars per ounce if we continue to see this momentum to the upside. But again, look out for the potential for profit taking at the end of this week as we get closer to the G20 and as we also see often that end of month profit taking in the market as well. So with that, I wish you good trading.